Well, good morning, traders and investors. Roger Scott here, senior strategist for Wealth Press. It's Monday. It's April 17th. April is halfway over. We're already in the second quarter. Where has the year gone, I ask you? I have no idea. Maybe you do. If you do, let me know. Send me an email, support@marketgeeks.com. Like these videos. You could find them on the YouTube Wealth Press channel if you don't know where to look for them, and I post them there nice and early. And also subscribe to our Telegram channel. That's below the links in the Wealth Press YouTube channel. Now, if you guys are enjoying these videos, post some comments for me. I respond. I like to interact with people. Otherwise, I sit here looking at the monitor, talking to myself all day. So it's kind of nice to interact and get some feedback. It's about 7:27 in the morning. The market's going to open up in 2 hours and 3 minutes to be exact. Now, last week was all about the Fed. All about the Fed. We had major Fed data. Inflationary data. It was all about whether or not interest rates are going to go higher or not. Right now, we're still pricing in about an 80% chance of a 0.25 rate hike. Now, as you can see here, the market's gearing to open up a little bit heavier. But again, this is randomness. This can just turn on a dime. And we got to be really, really careful because sometimes Mondays can be washout days. Now, here's the calendar for the week. You've got not a lot today except Thomas Barkin speaking. Tomorrow you got housing starts and permits. Then you got petroleum report. Then you got the jobless claims. Then you got the existing home sales. A lot of stuff for home sales this week. Philadelphia manufacturing index. And then you got the PMI composite flash. But meanwhile, you got John Williams speaking. You got Thomas Barkin speaking. And let's see if anybody else is speaking. Yes, you have Raphael Bostic speaking. I like Bostic. He's an interesting character. Anyhow, it'll be very interesting to see what the Fed has to say in light of what's happening with the market right now. Now, few things you need to pay attention to. Look at the energy sector. 96% are trading above the 20-day moving average, 87 above 50-day. This is very vulnerable right now. Healthcare, 92%, 77%. There's a lot of vulnerability right here. And lastly, utilities, 97%, 93%. I mean, just look at this. This looks really, really overdone. I mean, look at that. Really overdone. Look at that's really overbought. So I wouldn't be surprised if we saw some downside in some of these sectors and choppiness in the market. Also, I want to talk a little bit about earnings. Earnings are starting to take effect. And this week, which we got out of on Friday with a profit, actually, we didn't, Jack Carter did. You have Charles Schwab, 91% share, You've got JB Hunt. You've got M&T Bank. That's a pretty cool bank. State Street is reporting tomorrow. Netflix. And here's all the numbers. And if you're in my VIP room, I'll give you a link to this spreadsheet. Or if you send me an email at support@marketgeeks.com, I'll give you the spreadsheet too. So there's two ways of getting it. Just email me or let me know in the VIP room and I'll give it to you later today. Revenue's up about 3.9%. Earnings are down 19% for the year. It'll be very interesting to see what they come out with. Bank of America, they used to come out same day as Chase and all the other banks, but I guess they changed their tune. So Tuesday, you got Bank of America, Mellon Bank, First Horizon Bank, Fulton Financial, Goldman Sachs, Interactive Brokers, and then you got some blue chips. You got Johnson & Johnson, Lockheed Martin, United Airlines, and another bank. Wednesday, you've got Tesla. Tesla's expecting negative 19.6% for the year, EPS on 24%. Actually, revenue is 19% lower on 24.4% higher EPS. And then you got Abbott Labs, you got Ally Financial, Baker Hughes. It's starting to get a little more broad-based, but still a lot of focus on financials. Equifax, F5 Networks, IBM, Lam Research, Morgan Stanley, Nasdaq is coming out. It's getting pretty wide, but you still notice you got a lot of bank stocks. U.S. Bank, Synchrony Financial, Xeon Banks, Travelers, insurance companies. And Thursday, American Express is coming out. They're looking at 2.66 per share, which is only down 2.6% EPS on 14 billion higher revenue. I don't know what percentage higher that is, but we'll know by Thursday, I promise you that. Then you've got Alaskan Airlines, AutoNation, Blackstone, another financial, Fifth Third, Heartland Express, Huntington Bank shares. Notice it's pretty broad, but there's still a focus on banks. KeyBank, let's see here, where is it? Truist Financial, Union Pacific, Xerox, a lot of big names. Rite Aid is coming out. And then on Friday, we wind down with FCX, HCA, Procter & Gamble, and SLB. Got to be really careful with earnings. I got to be really careful with earnings. Otherwise, we're going to get into a mess like we did with with Progressive Insurance, which wouldn't be all that great. Now, let's talk a little bit about what bar charts has to say so I can get through this report and give you the seasonality for the week ahead. So Friday's session, Wall Street main indexes ended lower as a slew of mixed economic data strengthened investor expectation of another Federal Reserve rate hike. Exactly, 0.25, and I'll tell you, here it is, 8.88% of a 0.25 rate hike on the 3rd of next month. Now, JP Morgan jumped. We had Citigroup jump. Wells Fargo jumped. But they didn't close nearly as well as we thought they would. Retail sales data fell 1% in March, weaker than expected, of 0.5%. So consumers trimmed purchases of motor vehicles and other big-ticket items. At the same time, University of Michigan preliminary data showed U.S. consumer sentiment stood at 63.5, stronger than the expectation, while a one-year inflation rose. And I don't look at month over month. I look at year over year. 4.6% from 3.6 in March. Industrial production edged a little higher, stronger than he expected, but these numbers are not all that fantastic. Atlantic Fed President Bostic, who's going to be speaking on Thursday or Friday this week, as I mentioned, told Reuters on Friday that one more 25 basis point could allow the Federal Reserve to end its tightening cycle. Christopher Waller said Friday that further tightening would be needed as the Fed hasn't made much progress. I agree with him. And again, as I said, there's an 88.2% probability of a 0.25 rate hike, which means if this stays around 88, 90%, you're not going to see much of a movement because it's already baked into the market. Now, here's what I do want to tell you, okay? And this is important. Pay attention. Fed is talking interest rates going higher. The bond market right now is pricing in interest rates going lower. Now, I'm going to explain to you why. It's not because they think the Fed is wrong. The bond market fears there's going to be a mild recession on the horizon. And when there's a recession, interest rates don't go up. So I think we're going to get to the same place, but not for the right reason. The Fed is trying to tell us they're going to stop rates because we're going to be done with inflationary pressure. The bond market thinks we're going to be done with inflationary pressure because we're going to go into a mild recession. It's completely two different reasons. So we got to pay attention to that. Earnings are heating up. Bank of America. I swore that Bank of America and Goldman were on the same day as Wells Fargo. I guess they changed their days. Goldman, Morgan, Bank of America. A lot of stuff is out, so we got to be really careful. So we got to be very, very picky with the type of trades we choose. Netflix, Lockheed Martin, Johnson & Johnson, Tesla. They're all posting their updates, including building permits from the Fed, housing starts, crude oil inventories, jobless claims, a lot of stuff, existing home sales. It'll be an interesting week for the market. And in addition, we've got John Williams, Bowman. I didn't see Bowman on the agenda. Waller and Cook speaking. All eyes are focused on the Empire State Manufacturing Survey. It's not a huge report, just letting you know. In Europe, stocks are down a little bit this morning as earnings reports give us clues on the U.S. economy, which the euro is keying off right now. Sorry, it's hard to speak. It's Monday morning. Asian markets settled in the green. Shanghai closed up 1.42%. Wow. China Composite closed sharply higher and hit a 9-month high after the People's Bank of China maintained a 1-year medium-term lending facility operation unchanged at 2.75%, keeping monetary policy steady ahead of data on retail sales, industrial output, and gross domestic products. It'll be a big, big week for Chinese stocks. Now, official data showed on Saturday that new home prices rose at the fastest pace in 21 months in China. We could sure use that here in the U.S., wink, wink, supporting consumer demand and confidence. Japan, and I'll be talking about Japan a lot in my VIP live that we're doing Thursday and Friday. I hope you guys are going to be here. But there's a lot of stuff going on with Japan. Japan stock index eked out small gains, ending higher for a 7th straight session as the yen's weakness boosted export-oriented stocks, while bank stocks tracked Friday's strong performance in the U.S. As far as what we're watching today, Biogen rose 1% after they got an upgrade. Penn went down 1% after JMP Securities downgraded them. And as I mentioned, there is a lot of earnings on the table. Seasonality for the week. Let's look at seasonality for the week here. Look at that. Pretty cool chart, right? So you could see here, basic materials starts off the week, and this is seasonality. It's not guaranteed, but this is what seasonality. Financial has a strong week according to seasonality. Basic materials has a strong week, and utilities has a strong week. Now, utilities momentum levels are weak, but it doesn't mean it's going to happen now. So, and it doesn't mean this is 100% right. But after today, utilities tend to do pretty well. Consumer discretionary does well after Tuesday, after Wednesday. Here's after Wednesday data. Healthcare has a pretty choppy week. Industrial has consumer staples has a pretty choppy week. That's basic materials. Industrial has a good week after the second part of the week. Energies has a great day today, but starts moving lower. Remember those momentum levels. XLK has a pretty good second half of the week, but the SPY, as you could hear, is pretty strong today and tomorrow, kind of weak on Wednesday, and then Thursday, Friday really picks up. So I'm expecting a fairly choppy week because everything is choppy except for basic materials, financials, and utilities. And energies looks like it's peaking out today, maybe early tomorrow, and then coming down for the rest of the week, maybe for the rest of the next several days. But again, nothing really crazy and no major downside moves except real estate. Real estate looks awful the next 3 days. We'll see how that goes. And again, this is just seasonality based on the last 10, 20 years of data. This is not a sure thing. So take this with a grain of salt. We got to combine this with other indicators. But I figured I'd give this to you on a Monday, and this is also in our VIP room in the members area. Now, that was a pretty good little update for the week, right? So, folks, be very careful. Earnings, Fed speakers, it'll be very interesting to see if sentiment changes from the 0.25. And again, choppiness, lots of choppiness, especially during earnings season. Highly recommend you watch these videos because they do give you a good tone for the rest of the week. Now, if you love a good bargain hunt, who doesn't like a good bargain hunt? Then I've got something you don't want to miss. I just revealed a brand new way to trade, and it has nothing to do with the stock's share price and focuses on the option instead. Forget the share price. Focus on the option price. By identifying what I call a pricing mismatch, wink, wink, even a tiny little weeny 1% move in a stock could lead to gains as high as 31, 41, 46% in a matter of days. Yes, I'm excited. Once you learn how to use this information, you'll never look at the markets the same way again. I'm going to repeat this. Once you figure out how I do this, you will never look at the markets the same way. That's a pretty bold statement. If you want to learn more about it, follow the link below. It's in the YouTube Wealth Press channel right under the descriptor, and there's a link to a Telegram channel there where I give free trades, updates, and some good stuff. So again, don't miss out. Follow the link below. If you're watching it on the Wealth Press, on the Roger Scott or Wealth Press or whatever, you could find the link above or below the video. But if you're on YouTube, Wealth Press YouTube channel, I post the link there. It's in the Telegram channel there. All the links are there for you. Figure out where it is, Telegram, YouTube channel. I post these videos there right away. And I hope you guys have a wonderful, wonderful week ahead. I want to hear from you. Bye. Have a great day. Remember, my email is support@marketgeeks.com. Bye, and have a great, great day.